You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
When the silver price is leading the gold price out of a correction, that's very bullish. And more importantly, when silver juniors are leading the miners out of a gold correction, that's even more bullish. And that's what we're seeing right now.
In today's show, you will be getting an update from the Junior Miner Junky, David Erfle. His website is JuniorMinerJunky.com, and Junky is spelled with a Y. You'll also find the link in the show notes. Dave, thanks for joining me and coming back on Mining Stock Education.
Anytime, Bill. Always love talking to you.
So you are bullish on silver per your last Kitco article. But when I saw that you're bullish on silver for 2021, I of course am bullish as well. But I was thinking about how the silver to gold ratio has actually been falling to where 3 weeks ago it was about 80 to 1, but now it's 70 to 1. So even with that percentage drop, why are you still remaining bullish on silver?
Well, that's a good reason to remain bullish on silver, Bill, because when the silver price is leading the gold price out of a correction, that's very bullish. And more importantly, when silver juniors are leading the miners out of a gold correction, that's even more bullish. And that's what we're seeing right now. I mean, the SILJ is trading near 52-week highs right now, while the GDX and GDXJ are nowhere near their 52-week highs. And the silver is now trading as we're speaking above $26, there's very strong resistance there. So I think if we see a weekly close above 26, I think it could run to $30 pretty quickly, and that's what the silver juniors and the gold silver ratio is telling me right now.
When you look at the silver juniors and they're telegraphing that they expect a higher silver price, in your 15 years of doing this, how often are they wrong?
Well, historically speaking, never. I mean, silver has always led gold in both directions. In 2013, silver led the gold, smash, and silver always takes off later than gold. Like when I first got into this sector in 2003, gold had already taken off. And silver was still trading around $5 an ounce. So I started to really get into silver. And I bought a lot of physical silver at around $5 an ounce, and I still have it. And silver did not take off until 2006, where gold took off in 2001. Right? It double bottomed in 2001. But at the tail end of bull markets, they always top out at the same time. You take a look at the 70s bull market, where gold went from 1975, I believe I'm not looking at our chart right now. 1975, I believe it was, gold went from $100 to $850 by January of 1980. Well, silver from 1978 went from $5 an ounce to $49 an ounce in January of 1980. So silver always leads both ways, and silver always has a larger percentage gain in bull markets, in precious metals bull markets.
So just to clarify, when you see the money pouring into the silver juniors, like near 100%, that means silver is going higher in your observation.
Yes, I think that's a very good indicator. Yeah, that has not been wrong since I've been in the sector in 2003. And like I said, it goes both ways. When people start dumping silver and silver juniors start to show relative weakness to everything, that's a sign that precious metals as a sector are about to get hit.
So within the sector, besides the silver juniors, what other genre of junior mining company is bifurcating in a positive way within the sector?
Well, near-term takeover candidates right now, gold, that are basically developer explorers that are at the feasibility stage or in the finance stage or shovel ready, that have already proved up 5 million ounces, 4 or 5 million ounces in a top tier jurisdiction. There's blue sky potential there. They've got plenty of cash, they got access to capital, they're at the feasibility stage. Those are starting to bifurcate. I'm starting to see a lot of the companies like that are near-term takeover, that I consider near-term takeover candidates. They're trading at multi-year highs right now, while the sector is still in the process of consolidating.
What about the big deposits, the Vista Golds and so forth, that have viewed as out of the money call options on gold? How would you analyze their trading patterns right now?
Yeah, the optionality plays. Yeah, I mean, they're starting to get some love, but you got to be really careful with those. The optionality plays that have blown share structures, and they don't have management teams that treated them as optionality plays during the bear market. They were still drilling when they already had a huge deposit, and they were still spending money instead of sitting on their optionality play. They knew that they understand that it's that the gold price needs to get up to a certain price before their project becomes economic. Companies like that maintained a tight share structure. They didn't spend a lot of money. They kept their G&A low. They were just waiting for the gold price to rise. Those companies are doing better right now. But the ones that with bloated share structures that were spending too much money during the bear market and not acting like they were optionality plays, those are not doing as well. So you just got to be very careful on the optionality plays that you invest in, and also the jurisdiction means a lot also.
Any non-precious metals, stock or commodity that you're looking at for Q1 that you think might continue to perform well?
Oh yeah, I mean, copper, I think for the time being has got a bit ahead of itself right here. I think a 350 is pretty strong resistance, and it might back off here a little bit, but definitely copper stocks are something to look at. But silver, I'm just more bullish for silver because silver has so much catching up to do with both gold and copper.
Wow. Okay. Silver is where you made a lot of money too in 2011, if I recall, right? On First Majestic Silver, you made 30-fold, was it?
There were two stocks that I did had my biggest gains in, which were Silver Wheaton and First Majestic. I mean, and right now the biggest gains in my portfolio are from silver positions.
Arcana Silver is on the verge of bringing the world's highest grade silver mine into production. The Revenue Virginius mine in Colorado has proven and probable silver reserves grading nearly 37 ounces per ton silver, with all-in sustaining production costs of only $8 per ounce of silver. The mine is fully funded and permitted with infrastructure already in place, and has announced production will commence in 2021. Achieving successful production should result in a significant upward share price re-rating on the Lassonde curve. Arcana trades under the ticker AUN in Toronto and AUNFF in New York. To learn more, go to arcana.com. That's AURCANA.com. When you're this bullish on silver, let's take a silver junior, but you're not so hot on the management team. It's not a top tier management team, but the project is decent enough because it's in a silver bull market and all boats rise when the tide comes in. Would you be willing to take a stab at it?
Before I started my subscription service, yes. But now that I'm preaching buy and hold juniors right now with top tier management teams with quality projects in the best jurisdiction, I'm not going to mess with anything that I don't believe ticks all those boxes. Because as you know, I do an extensively researched report on the company before I buy it, and I issue it to my subscribers before I buy it. The evening before I'm planning on purchasing it, I'm planning on accumulating a position. So it's very difficult for me to say that a company has a top tier management when it doesn't. I'm not going to lie about that. So although I believe, like you said, that a lot of these silver, because there's really not that many silver juniors. A lot of these silver juniors that just have silver in the name will probably do quite well. even though I believe they're lifestyle companies. You know, they don't have projects that are very viable. They're still probably going to do very well. But I feel personally more comfortable holding a stock, especially now that my portfolio is completely transparent to my, over 400 subscribers. That I don't feel comfortable getting into a stock unless it's a quality all the way down the line.
Dave, back in March, we experienced a bear trap for the ages in this sector, and you went to all cash, and then you jumped back in later. You're totally positive for the year in terms of you made a lot more money than you've invested, so that's a great thing. But perhaps there's something there that you learned that you could share us. What was your biggest learning lesson of this past year?
Oh yeah, it's a huge lesson for everybody, I'm sure, not just me. But I mean, what happened in March was unprecedented. There was nothing in history to compare it to. So, going to all cash at the time felt like the best option for me. My portfolio had gotten down to where it was basically down to my investment value. I'd made money earlier in the year. I'd taken some profit, but my investment value was there. So I felt more comfortable going to cash to wait and see what would happen. And I did jump back in pretty early to a lot of companies, and I've done really well since then, and so have a lot of my subscribers. So I'm still, comfortable with the decision. But in hindsight, absolutely, it was a huge lesson that you can't base everything on history. I mean, history is a big part of it. Like what happened here in history before can happen again. We know history doesn't always repeat, but it usually rhymes. But like I said, there was nothing to compare this to in history. So I still feel comfortable with the situation, and my subscribers also they backed me completely. They were feeling the same. They were feeling the same way. So, yeah, it's a huge lesson for all of us, and we definitely need to keep it in the forefront of our minds when things are going really well. It's probably a good idea to take even a little more money off the table in this environment, and I've done that.
Thanks for that, Dave. And with the Biden administration and the prospects of a Biden administration, does that affect your approach to mining investing in the U.S. and investing in general as a U.S. citizen?
As far as you, so I imagine I expect you're referencing permitting in certain
Correct. For example, when Trump won, we saw the Pebble project, that share price got inflated because, Trump's going to be more lax in the permit. Now, with the Democrats' philosophy and, the environmental movement and such, could that have a negative impact on our mining investments?
I think in states outside of Nevada and even outside of Idaho now, because before Trump, the Trump administration took over, Idaho was kind of off the list. Now Idaho is back on the list in a big way. But if you're considering investing in something that might have some environmental issues, you might want to think twice. You want to make sure that if it's a brownfields project, there is no environmental issues. And as far as the state you're considering getting into, look at the state's history as far as permitting is concerned. Like California is a state that I live in, but I wouldn't invest in because the permitting here is very difficult. So you might want to definitely do a lot more research on permitting issues now that the Biden administration is.
So if there's any just to clarify, if there's in the U.S. a mining project with any legacy EPA issues, you would avoid at this point?
Yes, but it depends on which state it's in. I mean, like I said, if it's in Nevada, or if it's I own stock in a company that's had issues in the past with has had EPA issues in the past, but those EPA issues have been solved. So, and a very strong management team has taken over. A proven strong management team has taken over. So I feel confident with that company, and they are in Idaho, and they are in an area in Idaho that is very mining friendly. So, like I said, it depends. It depends on what state you're going to go in.
Dave, based on our conversation, other than buy quality silver juniors for 2021, what further advice would you like to leave with the speculators listening to us?
Oh, just what we touched on a little earlier. I mean, it's never a bad idea to take profit. I mean, I think of that scene in one of my favorite movies, Glenn Ross, where Alec Baldwin is saying, "Always be closing." Right? If you're a salesman, always be closing. Well, if you're a speculator, always have in the back of your mind, always be taking profits at some point. Keep your core positions during a bull market. Obviously, absolutely, because we are now in a buy and hold bull market in the junior space for the first time in 8 years. So never sell your core positions, but they get too large. You need to trim those positions and take some profit off the table.
And when you trim those positions, do you factor as a U.S. citizen long-term capital gains versus short-term, where you're taxed at a lower rate if you hold it more than 12 months? Does
Absolutely.
that factor into your
yes,
decision?
I do, but it does, but it is not my ultimate decision. You don't want it to be your main decision, but it is factored in. Like, fortunately for me this year, all my capital gains are long-term, meaning so I'm only paying 15%. Well, right now. I mean, now that Biden has gotten in, I mean, he ran on the platform of raising capital gains taxes to 39.2% across the board. So, but for right now, it's still 15% long-term capital gains. So fortunately for me, like I said, this year, all my capital gains, my realized capital gains are long-term. But, I mean, if next year, because a lot of these things have run up a lot since I bought them. And, if a position gets too large in my portfolio, one of my big rules is if it gets larger than 10% of my entire portfolio, I'm going to trim it, whether it's, short-term capital gain or a long-term capital gain, because the positions got too large. And, these juniors, anything could happen at any time. They're very high risk. So you always keep that in mind.
Excellent advice. David's website again is juniorminerjunky.com. David, always appreciate your monthly check-in on the show. Thanks for joining me today.
Thanks a lot, Bill. Always great to talk to you.